Hello, this is Thierry Samlal from PMML. Today I want to present to you market statistics for multifamily properties in the province of Quebec for the month of May 2025. So before we go look at our top transactions for the month of May 2025 across the province of Quebec, I want to share with you some statistics on the market. So first of all, let's talk about variations in statistics since the beginning of the month of January 2025. So for the first 5 months of the year. If we're looking at the overall average price per door in the province of Quebec, the average price per door for the whole province in January was around $150,000 per door. We've seen increases every single month of the first quarter of the year, all the way up to the month of May, end of May, finishing at close to $157,000 per door. So that's an average increase of about 3.5% on the price per door across the province of Quebec within the first 5 months of the year. Of course, there's territories like Laval, Montreal, Quebec City, Gatineau, etc., where the average prices per door were higher, but we're still seeing that increase right across the province. If we're looking at cap rates, at the end of the month of January for the last 12 trailing months, we were at the general cap rate, an average cap rate of 4.40% for the last year. Every single month, that cap rate has been varying to finish at about 4.42%, going around 4.41, coming back up and down, but staying linear pretty much for the first 5 months of the year. So we have a price per door increasing, but a cap rate which is more or less the same. If we're looking at the gross income multiplier, we went from 14.92 all the way up to 15.22%. That being said, let's look at volume transaction in volume. So first of all, the number of transactions have increased drastically. We went for the 12 trailing months in the end of January from 2,232 transactions all the way up to 2,417. So more transactions every single month, and that has been increasing constantly for the past 2 years. Let's look at transactional volume. How much money do we sell every month for the 12 last trailing months? So if we're looking at the month of January for the 12 months before that, we had $5,307,000,000 of transactions sold. And that has been increasing every month to go up to an amount at the end of the month of May 2025 of $5,738,000,000. So that's $700 million worth more in transactions. So basically what's going on right now? So we have more and more assets being sold. The whole ecosystem here is maintained by the financing capacity of the buyers and their capacity to refinance assets that they already own through very lucrative programs like, for example, the MLI Select program from the CHMC, which permits you to transform a lot of equity into dollars that you could use to purchase other assets. So a lot of variation, a lot more buyers than we used to have on the market. Buyers are way more organized. The smaller buyers are becoming more important in size and have more and more equity that they could use. A lot of the buyers that are on the market right now did their appearance about maybe 10 to 5 years ago, and now they're refinancing either the first turn or second turn and pulling out equity to be able to purchase more assets over time. Now, if we're looking at the price per door across the province of Quebec, we're looking at the Gatineau area, which is close to the Ottawa border. The price per door has increased about 2.3%. Montreal, we're talking about 3.6%. South Shore of Montreal, we have a slight drop of 1.2%, which is more or less nothing. Laval increased 5.2%, that's pretty much. Sherbrooke region increased about 1.1%, which is not much. It's pretty linear. A lot of transactions though taking place in Sherbrooke. It's incredible number of transactions. If we're looking, we have 205 transactions that took place in Sherbrooke alone. Compared to say South Shore Montreal, which is 328, and say the Quebec national region of Quebec City, 318 transactions in the last year. and the price per door is increased of about 3.6% in the Quebec region, in the Quebec City region. More and more transactions, more and more buyers present on the market. Let's look at our top transactions across the province for the province of Quebec for the month of May. We have a transaction that took place in Westmount, a 11-story high building, all concrete, large footprint, located in Westmount. At that time in Westmount, they were repositioning the whole area, and they built a lot of assets with large footprints on ground. We're talking about 61 units, 11 stories high, and this went 1965 construction. This went for $24,300,000. We're talking about $399,180 per door. That's almost $400,000 per door for a 1965 asset. What you have to look at here is the square footage of the asset and the capacity to have large units rented on the market for an appreciable price per square foot. Why? Because in that area right now, which is very close to downtown Montreal, most of what's being built is micro units with micro size studios, one bedroom apartments of very small size. So there's a large request now for people that want to live downtown that have the budgets, because they don't necessarily own the car. They can do everything by walking distance. They don't have the car. The tenants don't have the car payment to be able to consider, so they could put that on rents, and they're willing to pay high prices for rental units. So that's what's going on here. Now, if we're going into, just to rewind here, here it's a Gallardo family that sold to the Kevin Slater family office, which is based in the United States, but has purchased assets across North America and across the world right now. They're looking for assets well located in the west end of major cities, major metropoles across the province and across the world, basically. And they purchased this asset because it has prime location, a lot of square footage, and it's right close to Montreal. So they don't mind maybe paying a little higher price per door, but being able to pick up that asset, and they know that over time, square footage, large apartments is going to be very lucrative. Let's go to Mascouche now. Mascouche is a TOD-oriented development site. There's a train station right there. It used to be an old industrial quarter with an old airport that they shut down. They took the industrial quarter, they put it on the airport grounds, and where the industrial was right next to the train station, they're building apartment buildings, a multifamily. Here we have an institutional player that purchased this one. What's interesting to look at here is the fact that Skyline Real Estate REIT bought this property, and that it's two buildings side by side. The main floor door is commercial, and we don't usually see that in REIT acquisitions, but here was logical to do so, to have that semi-commercial property, because there's a lot of multifamily being built, an extensive amount of number of units, but there's no services in the area. You have to cross the highway, take a car, you take by biking distance, go a distance to be able to go do your purchases. So to have that mixed-use property at that area is a sure deal over time. This transaction went for about $473,000 per door. Côte-des-Neiges property, western part of Montreal, many smaller units in that area, 1947 construction, 41 units, went for $301,000 in average per door. What you have to know is that you're going to see prices per door increase drastically in Montreal, but the cap rates are going to be totally acceptable. That's due to the fact that a lot of these buildings are sold with reduced operational costs, either because they were optimized, heating systems were changed, or energy costs were flipped over to the tenants. Also, major increases in rents in those areas. There's a lot of public transportation. There's a lot of universities and schools in that area. People like to live there. It's a multi-ethnic area. And also, we're seeing increases every single year in this type of assets. That's where we're going to get our price per door, which is that high, but at the same time, cap rates, which are really acceptable. Let's go towards Sherbrooke. Sherbrooke, closer to the American border. Here we have a concrete asset, very rare in that area, 47 units, went for about close to $173,000 per door. That's quite a bit for that area. But at the same time, there's no concrete assets ever sold. There's a lot of brick and wood. There's a lot of smaller assets of 5-6 units being built over there. After that, let's go into Trois-Rivières. If you have a small budget, but you want to get a critical mass of units and you want to buy them at a reasonable price, Three Rivers is still a place where you could go. Here we have a portfolio of 3 different assets that were sold, 72 units in total, at an average price of about $111,000 per door. Very reasonable price compared to Montreal, where the average is about $190,000 per door. Of course, your rents are not going to increase as fast, but still you could have something which is really, really interesting as far as price per door. Let's go closer to the mountain. Plateau Mont-Royal, very close to Outremont, 1963 construction. 32 units, went for $205,000 per door. A few seconds ago, I was telling you that the average price per door in Montreal was $190,000. Buying an asset in that neighborhood for $205,000 per door is really a good purchase. If we were having this conversation years ago, you would probably be at an average of about $170,000 per door in that area. Now we're way above that, so $205,000 per door, it makes a lot of sense. Let's go to Montreal North, very interesting sector. Most of the buildings built in that area are 1960, 1970. It's been an area picking up in speed for the past 7 years. We're talking about a 22-unit asset close to the waterfront, sold for $270,455 per door. So that's a really interesting price. Now, as I was saying earlier, more and more assets are going to go for between $200,000 per door and $300,000 per door. The price per door is going to seem high, but at the same time, when you're looking at the cap rates, it makes sense with the interest rates we have right now. It all computes at the end. Huntsic, another area which is close to Montreal North, 41 units, went for close to $143,000 per door. That's below market a lot. But if you're looking at the cap rate here, we're talking about 3.75. So when the average interest rate is about 4.5% and you're paying 3.75% in cap, the gap might seem important, but when you're looking at the price per door, lower than $143,000 per door, it makes a lot of sense. Laval, we don't see a lot of transactions here, but in Laval, here we have a 1977 asset, 34 doors for close to $167,000 per door. That's standard pricing. Laval. It's just interesting to see the number of transactions happening in that area. And let's finish here with the Brossard, 2 buildings side by side, 1968 construction. We're talking about close to $213,000 per door. If we were having this conversation 5 years ago, we would have been at $130,000 per door. Now we're at $213,000 per door. That's a huge increase. But the cap rate is 4.44. It makes it so interesting. I hope that this information was useful to you. If you have any questions, you can contact us anytime. Feel free to give us a call or send us an email. PMML.ca is our website. We'll speak next month. Until then, I wish you the best of luck in all of your real estate adventures. Take care.